Hey guys, welcome back to another video. If you don't know me already, my name is Tristan, aspiring six-figure day trader with the MRMTC crew. Today's video is going to be a little bit more in-depth guide of the standard deviation plus OTE model that I've been using in my past video that I showed you guys. Y'all showed so much support and love on that video. I figured I would give you guys this just kind of as a thank you. So let's head into today's video. So a lot of you guys have been asking me, what exactly is standard deviation? What standard deviation is an ICT concept using the Fibonacci retracement tool to 1. Help us find areas in the market where price will either reverse or end up retracing, and it will also let us know exactly where to enter the market with a more precise entry using OTE or the optimal trade entry. Now, I've drawn up my Fibonacci for you guys. I'll put the settings on screen so you can copy that. I marked this first area down here in gray. This is going to be our anchor point. This is what we use to mark the manipulation leg coming out of accumulation and then followed by distribution. So that's what this anchor point's for. Coming up to this red zone, I've marked it in red for a reason because we could possibly reaccumulate or redistribute. This is not where we're going to get a reversal according to standard deviation. So I want you guys to be careful of this level. Coming up to this yellow zone, I marked it in yellow because we can get a reversal from it. Sometimes it's the first reversal and then we come back lower or higher, or sometimes we only get this one reversal and then we continue in the opposite direction. So you can definitely make money off of this zone, but coming up here to our -4 to -4.5 range, this is what they call the max expansion. In some cases, we do get a second reversal off of it, but if we just go straight through it and we come down to this range, find an entry based off of it, usually that's our money maker. So if you guys want to see me use this tool to teach you guys to make some money in the market, what I need you to do is like, subscribe, and comment what you found most useful in this video. So I have my chart pulled up for you guys here. We're on the 5-minute time frame on NQ futures. What I'm going to do, step 1, is look for my AMD, my accumulation, my manipulation leg, and then my distribution. For some of you guys that are a little bit more advanced, you might already be looking at it, waiting for me to go to it. For some of you newer guys, I'm going to kind of guide you along. What we're going to do, come over here to the left, grab our path tool. Boom, right here. This sideways movement, that's going to be our accumulation. So a sideways movement kind of comes down a little bit, doesn't sweep out this low. Sideways movement comes up, doesn't sweep out this high. Finally get a drop down lower, sweeping out this low. Change the state of delivery. Close the body, closes above the body of that previous high. Making higher highs, higher lows, continuing up higher. That's our distribution leg. Accumulation, manipulation, distribution. Easy as that. Now step 2, what we're going to do, I'm going to take this off for you guys. We're going to mark out the range of the low to the high of that distribution range. Now, what we do see here, come up, get a nice little pullback, little 5-minute rejection block off the 0.5 of that Fibonacci. So what we are end up going to be doing is move this up because we do proceed higher, forming a higher high, higher low, overall trend of the market. So we're going to readjust our fib for that because we have gotten a new high and a higher low. Looking at this, got a nice little 5-minute rejection block. What we are going to do, scroll down, go on the 1-minute time frame for you guys here, get a little bit more of a precise entry. That's our OTE right there at the 0.705 optimal trade entry. Going to be looking for something around that area. Let's go on to S&P 500. What we can see right here, same 1-minute time frame. We're going to zoom in a little bit for you guys. Going to go a little bit fast. Right here, this high on ES does not get swept out. That's what it did on NQ. As you can see, this same high right here, it matches up, gets swept out on NQ, not on ES. See right here, high, lower high, high, higher high. SMT divergence. If you need me to make a video on that, I can. Just ask in the comments. What we're going to do is off of this S&T divergence, mark out the leg that did form it, which is going to be from this high all the way down to this low. And as we can see right here, let me readjust that. This -2 to -2.5 range is lining up with our OTE. So that's what you really want to look for when marking out standard deviation. Wherever your OTE is at, you're going to look for an SMT divergence, or guess what? Another manipulation leg outside of accumulation, which in a way you can mark it off of this leg. It's still somewhat similar to those previous highs and previous lows. You have your accumulation, and then you get a manipulation leg outside of it. Still going to match up. -2, -2.5 range. You can mark that out. But what I like to get for more precise entries is going to be the SMT divergence. Just so I know overall trade is going to play out. Still barely makes a difference. So as we can see, come into market open, come down to that 5-minute rejection block off of that original equilibrium of the Fibonacci. Get a nice little 1-minute rejection block. Gonna see kind of how it plays out on ES right here. And as we can see, we actually end up sweeping this low all the way down here from the bottom of that distribution leg, which is the same point we marked out on NQ. It matches up with the same distribution leg on ES. It does sweep it out. It doesn't do a double bottom. Or maybe it does. Did it do a double bottom? Let's find out. Low point 7525.25. 7529.25. So, oh, well, no, my bad. 7525.0. So it did end up sweeping it, pretty much a double bottom. It's 0.25 points off. What we do end up doing, get a nice little engulfing candle outside of that, which then I'm going to take my entry off of. Gonna let it come down just a little bit. What you could do here, there's two things you could do. We're gonna get rid of this 5-minute rejection block. You could either enter off of this 1-minute rejection block. What I'd be looking for is equilibrium. You can just place your limit order right here, 1-minute rejection block. Set your stops just beneath it. It's about 14 points. Perfectly good risk to reward. This is actually what I ended up doing. And then take it to the previous highs of that initial distribution leg. If you want to look for more targets in the market, we do have a lot of buy side liquidity we could come up to, which we did end up sweeping, which all these points to the left, scroll over, all three take profits, get hit. That's over 150 points in the market. Very, very volatile day. I hope this video makes some sense for you guys that have been asking about it. You know, how do I set up my Fibonacci? How do I find the OTE entry? What do levels mean? So I really hope this video kind of clears it up for you guys. So if you have any questions, concerns, feel free to ask in the comments. I'll be glad to answer any questions that might come my way. As always, like and subscribe. Take care.